One of the most important and common things you're going to do is actually drawing upward trend lines. You want to identify an upward trend so you can buy in early in the trend, ride that trend out and get some profits, and then later you'll sell when that trend starts to end. So drawing upward trend lines is very important. So and what you'll be doing maybe all the time if you like doing trading off of trend lines versus, let's say, other indicators, but always a trend line is a strong indicator on its own. So let's take a look at how to draw and how to trade on trend lines. In this lesson, we're going to talk about specifically how to draw and trade off of uptrending trend lines. So when you're drawing an uptrend trend line, that's going to be really your support line, right? You're looking at your lowest lows, and you're going to connect to your next lowest low that precedes a new high. Okay, I'm just going to cover these three bullets real quick. It actually makes much more sense when we look at the graph, so graphically, but it'll make more sense there. But the idea is that as long as new highs are being made, you redraw the line to connect the lowest low before the last high, and then and when prices stop making new highs, then you stop drawing, and you extend that line at the same slope in the future. If anything to take away from it, you're going to draw this long slope line, and it's going to be an upward facing line, and the idea is you're going to buy towards the bottom of or the early part of the trend, and then you'll sell towards the upper part of the trend, and then in between will be your profit. So this is kind of the specific definition about it, but let's look at the example and how to trade off that to make this make more sense, because that's a little trickier to just talk about it. Let's now actually show you how to do it. So as you can see on this particular example here, we have a starting point. So we're picking kind of that lowest low as a starting point. If we look at, let's say our chart looks like this, we're going to that lowest low, and then we're going to start connecting those other lows, and we're looking at trading ranges here at the bottom of the trading range. We're basically doing it off the bottom of the wicks. You could trade through the middle of the bars, by the way. Just be consistent if you do it that way, but most people, almost everyone does it this way, where you're looking at the low of the lows, and I prefer it that way, and that's how I'll demonstrate it, but it doesn't mean you're wrong. Just whatever. If you want to go through the middle of the candlesticks, just make sure you're consistent. So as you can see, I've drawn this line and I've connected these lowest lows. And so if I start at the bottom left where that blue line is, you can see the lows approach it like 3 times, right? That first kind of red long wick bar doesn't exactly touch it. Nothing's perfect, but it gets close to it. Then there's another like doji type bar where it's a very small candle body. It's also red, showing that the closest was lower. Barely lower because it has a small body, but you can see that there's a low to the bottom there that comes to the bar, and then we had an uptrend, or an up day, and you can see a shorter wick on the bottom there, but you can see where I've connected those together. So it basically is connected 1, 2, 3 points there, and a lot of people will buy on that second or third touch. That's the idea of when they're buying, and this will introduce us to now our rules around how do we trade around this. So this is how we draw it. Now how do we trade on this? So there's 2 rules around this. One is called the support line entry rule and the support line exit rule. So the support line entry rule says that you buy on the second or third touch of the support line. In this, where I have the arrow here, you can see it's on the third touch of that. It could have been on the second touch or near touch of that support line. That's when you're buying in. You're in an upward trend, you want to ride the upward trend, that's when you're buying in. And then when you want to exit, once that support line is broken, right? Sell as soon as possible after the low in the range, falls below the support line. That means the trend is broken. You can see it's approached it, but it's gone past it. In terms of the classic support line entry and support line exit rule, you're basically selling as soon as it breaks that blue line. And what's happening here is you want to confirm that the trend really is forming, and that's why you're waiting for a second or third touch of the support line, because that establishes the trend more. In fact, the more touches it has, the more established the trend. So a 4th or a 5th touch would show a very established uptrend in this case. And the reason you want to exit out of quickly is you want to take those profits, book those profits. You're not hoping, once the trend line is broken, the trend line is broken, and that's where you want to then sell as soon as it hits that support line and get those profits in there. So if we look further along here, let's say we had bought on that third touch, and you can see how we've gone up. It's actually had like another touch there, and the price has gone up, and we get to a point where it goes below the blue line a little bit, and that's when you would sell, right? That first time it breaks through that blue line. Certainly when you have that other candle on the right of the line there where it's really definitely gone below it, you definitely are selling then, is the idea behind it. Because the trend is now broken. Now it could go sideways from here, it could go downward, but the trend, the definite uptrend has been broken. In fact, I took this from a real security, and this is what happened afterwards. So you can see it actually really did, break the trend and start heading in the opposite direction. So I wanted to sell and get that profit before it went down and ate up all my profits. Is the idea behind this. So I'm watching that trend line, I'm buying on the touches, and I'm selling once it crosses through there. And it's kind of extra credit and how trend lines can kind of, combine with other indicators. If we were to look at this, is there something more going on here once we reach this point here, right? So we bought, let's say we bought on the second, or let's say we bought on the third touch, and then we have, the next kind of, let's say, periods happen. And you see those two last candlesticks. I've kind of covered up the other candlesticks for a moment because something's going on here. Do you see the white body candlestick, the second from the last candlestick, and then that big red candlestick there? And then I've covered up what happens after that. But if we were to look at that, we'd say, okay, we're in an uptrend, but that looks like something, right? Think about our candlestick lessons, or think about candlesticks. And this is extra credit, but if you were to say to yourself, that looks like an engulfing candlestick, right? We're in an uptrend, and that one big candlestick has engulfed, the big red one has engulfed the other one. You would be correct. That is, well, as we'll learn about candlesticks, or learn the candlestick lesson, that is a bearish engulfing candlestick. There are bullish engulfing candlesticks too, but this is definitely a bearish one. Means the prices are about to go down. And why is that? Because we were in an uptrend. You had a red candle body fully engulf a uptrended, let's say white, or it could be green depending on the color, but you have the red candle, a down day, engulfing a previous closing up day. So that's telling us from a candlestick pattern that there might be a turn here and going to a downtrend. You want to wait for that to fill in the next day where it should go back now downwards. And in this case, it went down. The close we had one in between day where actually the close was a little higher, but it broke that trend line. See where it broke that trend line for part of the day? That would have been a sell signal in itself, and maybe we should have sold there. You can sell there. That's the idea of a true support line breakage, that you are selling there. But if you were to wait it out a little bit more, you definitely would have a sell confirmation, because now you've got a red bar, red candlestick price bar. You've got an engulfing, bearish engulfing, and you've got a breakage of the support line. I mean, that's definitely, and if there's anything telling you to get out, that's telling you to get out. And, so that's a little extra credit on this one first, this real one that we pulled from. And then when we look at the pattern after that, you can see, and this is from a real security, you can see that, boy, it went on a real tear downward. Look at all those red candlesticks right in a row there, just down, 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 and then it reached the bottom and then went back up. And then maybe there's a new trend we can form to trade on that new upward trend to the right that might be forming. But if we look at this, we can see we had a nice little uptrend. We bought in there. We made some profits. That bearish engulfing candlestick was worrisome. Maybe I sell there. Maybe I'm hanging on for the trend line to be broken, but once it is, maybe that's the time to get out. I got a lot of factors telling me sell, 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 so to speak.